Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, October 1st, 2020. We'll cover the same things I've been covering recently. We'll start with the broad markets, quick update there, roll into very brief update on crude oil, natural gas, and coffee. Again, those aren't the only things out there, but some of the things I'm watching right now. All right, starting out with this chart. This is the NQ NASDAQ 100 futures 60-minute chart, and we have this level that's been highlighted as what I believe to be a very significant technical level, about 11,547. What I'm doing there is circling all the reactions, and yet another reaction today. Well, bigger picture, we had a series of divergences, divergent high, trendline break that started this whole correction that ended with big divergent low. These are just one divergent low, one extension. You can call it three divergent lows, but it's just one large consecutive series of divergences, and so far that was the technical catalyst for this rally. And we've come full circle, as highlighted yesterday. We put in a smaller divergent high right here on the 60-minute chart, and that's it. I mean, we're pretty much right on that level right now. You can see 11,535. So give or take, that's what we've struggled with all day. So like I like to say, resistance is resistance until unless taken out. And based on the technical posture, a lot of other things, I'm still favoring a reversal correction from these levels. And you can see these would be logical pullback targets. They were resistance levels on the way up. But I think we come on down here at least this 11,228 level is what I'm looking for sometime probably this week, maybe early next week. And of course, if it goes the other way, if they can take 11,547 out with conviction, yeah, it's going to be bullish, of course, because it's a big level, and it could actually have, intermediate term, bullish implications. Because again, I think that's a pretty significant resistance level right there. However, we're still going to have, if it's popped today and we ran up, let's say, no higher than that next resistance, 11,704, and it happens soon, we'll still have divergence. These divergence lines would just be extended up a little bit like this, and it might look something like this, run up there. And then reverse. So something to watch. Sometimes divergences are burned through. They're not the be-all, end-all. But again, as this chart shows, each and every time we've had the divergent highs right there, divergent high, divergent low, nice rally, another divergent low, nice rally, another divergent low, nice rally. So they are good indicators of when you're going to get the near-term trend reversals, and that coupled with a rally into pretty significant resistance, still has me favoring this downside scenario. But with the big positive divergences that were put in place, you just can't rule out additional upside from here. So we'll watch that level, and on QQQ, and what do I mean by taken out with conviction? That's a great question. In fact, before I get to QQQ, let's jump over to the website. On yesterday's post, QQQ reverses right on Q. A little play on words there. Somebody asked, well, what does it mean? What's your term conviction? With conviction is somewhat subjective, but typically that means QQQ, NQ, SPY, etc. need to clearly move above or below those resistance or support levels, not just a brief dip below. So, the more impulsive, the better. And we're going to look at QQQ right now. So whereas NQ, I just showed you, is still at resistance. QQQ, the line that I have is at 280.32. We were a little higher there, the reaction highs, and that's about where we're at right now, what we hit today. So we're slightly above that, but that is certainly not with conviction. In fact, that was a 30-minute candle. That's not even a 60-minute candle close. The first candle of the day goes from 9:30 to 10 because there's 6.5 hours in a trading day. There's our first 60-minute candle close, just a hair above there, and we're still flirting with it. So statistically speaking, or looking at percentage terms, we're only a 1/4% above that resistance level now. And so while that is not the ideal bearish scenario, the case for the correction would have been better to see a gap down today and continue to move away, putting in a solid failure at that resistance level, not a gap up, and certainly not a gap up that has kept us above that level all day. So, like I said, not the ideal scenario, but that is not a breakout with conviction. That is a so far the Qs are waffling, and again, for all intents and purposes, we're still struggling with that resistance area. These lines, especially on QQQ, aren't down to the exact cent. You got to give it, on a 280 point security, 1 or 2 points is a fraction of a percent. But again, keep it simple. The farther we get away from that level, the safer we can say that that's a breakout, and that level is now in the rearview mirror. And should we fail and move back down below, like I said, it will keep those negative divergences on that NQ 60-minute chart in place, and it will increase the odds we're going to get that a decent correction. Let's look at SPY. SPY, same story, capped at resistance. On SPY, remember we had this gap back here, right there. There's your big old gap, and the bottom or the top of that gap, I put that line right there at 338.71. And that's pretty much what's capped SPY so far. There's a high of 338.74. You can see when I put the crosshairs here, the low there was 338, actually 338.52, close enough. You can see again the line I have on, or close enough to the gap, and that's what stopped it so far. And SPY, like the NQ 60-minute chart, we have some divergence, negative divergence there as well. And again, the fact that we've rallied into resistance, with divergence in place, leads me to favor a pullback from these levels. The bigger level on SPY, I think this is comparable to that level on NQ that we're testing now, because you had these reaction highs from back in here September. So that was about the 9th and the 10th, and then the 15th, 16th, 17th, maybe, all those reaction highs, and that's up around 342.37. But again, been saying this a lot lately. To me, it's all about the Qs. QQQ, the NASDAQ 100, those beloved FANG stocks. See, there's those two same reaction highs from those same days, and that's what we're struggling with on QQQ. One other thing to look at, somewhat related. This is a component of the NASDAQ 100. And one of the hot stocks du jour. Everybody's tripping all over each other to buy anything to do with electric cars right now. California, I'm sure you guys saw the headlines last week. Governor of California has mandated all cars be electric by whatever it was, I forget what it was, 2027, 2025, whatever it is. Whether that happens or not. But what I'm getting at here is this is, to me, talks about psychology. Oh, okay, I had to pause the video there for a brief second. You're talking about investor psychology. Again, remember I have this box here that I've talked about that is the Tesla split and post-split gains in the stock right there. It had a 5-for-1 stock split, and so everyone that bought the split or thereafter, that's where they bought. And for a while there, right away they clocked hard. I mean, from the top, Tesla fell from that post-split high in a matter of short order. It fell almost 35%. 1/3 of the market cap of this company was wiped out in a matter of just days there. And again, it talked. I talked about it before the splits even happened. How after extended runs, in going back in time, looking at Apple and other companies, that's fairly common to see a buy the rumor, sell the news. And again, it talks to me. It's at least a subset of the traders in the market. It's psychology that they got underwater quickly. Undoubtedly, a lot of them were just hoping and praying things would come back, and they did. They saw their if they wrote it out. They saw a lot of those, in some cases, all of their big losses, wiped out right there, come back to break even. But again, boom, they got checked again. So they went underwater again. Now they're back there. So the big question is, how many of those trapped longs that bought into the split are just praying and hoping to get back to break even again, and will they start stepping in and selling? And so here we're at the bottom of that zone, and as I've said, I think if we can take that out, it just shows there's a strong appetite for stocks in this market, and that's going to be bullish. So Tesla, it's not everything in the market, but it's one thing I'm watching, and I just wanted to point out we're back at the bottom of that range now, where I suspect here or somewhere in this range, that's where you'll start to see at least a subset of these traders that bought into there and got trapped, just selling it and saying, you know what, this isn't for me. I never signed up for this. I didn't think a stock could drop 35% so fast. We'll see. Apple, AAPL, typed in something wrong there. Apple's not even close to their split and post-split levels. So here's Apple. There's the box right there. There's their 4-for-1 stock split, and everybody that jumped in and bought into it afterwards, and they are still from the from the bottom of that range. They're still underwater to the tune of about 8%, and for those that bought in towards the top of that post-split rally, they're down about 16% right now. So these are things that I think have an impact on the market. And then from a technical perspective too, you know, there's, of course, you want to look at that. You have a trend line that was broken and now being back tested, or very close to being back tested. So those are some of the things I'm watching in the market, and we'll keep it simple and watch QQQ today and see if it can either hold above and start to build on today's gains and get away from that top of that you know, that resistance level or the recent trading range right here, or if we fall back down below it, which is still what I favor at this point in time. Crude, I told you yesterday that I didn't have a strong convictions on where it was going because I don't have a lot of solid support and resistance levels. I did highlight before it broke down, it was in this symmetrical triangle, saying the next break would determine the next tradable trend. We broke down, very big drop in crude, very swift. But I just wanted to point out, look at this, look at that back test. You know, that would have been an objective short entry. We made a perfect back test, actually two separate back tests of the trend line right there, and look at this drop since there. And actually it was double resistance. It was the apex of the triangle pattern. So you had double or dual resistance. You had both the downtrend line being back tested, right, and as well as the uptrend line being back tested. It doesn't get any better than that. I wish I would have seen that one. Put on a short there with a stop above, and look at that drop so far. Crude futures, that's 7% in quick order since it back tested there. So I just want to point that out. Where it goes from here, I don't know. There's a little support there. It's overdone now. I certainly wouldn't short it at this point in time. But again, it speaks to the fact that, you know, as I said, the break of this triangle pattern would most likely determine the next tradable trend, and that's so far what that's been to the downside. How much more is there? I don't know. I'd have to really study the longer term charts, but not a great sign for the economy too when you see crude dropping and the stock market rallying. Usually crude and the stock market go in the same way because higher growth expectations in the economy is typically what's causing a rally in the stock market, and therefore you should have a higher demand for crude oil, and obviously that's not the case here. You know, there's other factors that come into play, short-term supply and demand dynamics, but again, falling crude prices, especially sharp drop like that, is a bit of a red flag for the rally in equities, especially if it continues. And on a related note, or somewhat related note, I've highlighted NG recently. We had a divergent low here, set up with a larger divergent low the other day at that previous reaction low. I have a support zone here. We tested it, bounced yesterday. I highlighted that. We're back there again. So failure to launch so far, but look, it also has to take out this trend line to really get going, to get some traction, as I said, up to that next target there at 207 and change, then 2915 and change, and this potential trend line right there. And I can say this, it's not ideal price action, although the chart is every bit as constructive as it was yesterday, because we still have the positive divergence that's still in place, and even if we happen to slightly undercut yesterday's low and then reverse, it'll still be in place. I'll just take this line, go like this, right, go like this, and you see the PPO do this and the RSI do this. So I'll say it, it's an objective but aggressive entry here, because the crude nat gas is in a near-term downtrend. Make no mistake about it. And that in itself, especially without any buy signals, makes it an aggressive counter-trend trade. But you can either go long on a buy signal, like a breakout above resistance, for example, that trend line. That's an objective long entry, and a break above that, or a break above that 2708 level. That's also objective. Or you can go long on a pullback to support, especially when you have divergences in place, and you get a better entry price, and you just have to keep your stops somewhat below there. What would that mean if it reverses? It'd be a nice move from where we're at right now up to that any of these potential targets. So again, just a setup, and again, aggressive setup at that. Okay, and a quick update on coffee. I've mentioned that one recently. Not good that it's taken out this support. This may be a whipsaw. We're not very far below that 108.60 support level. We're slightly below it. The divergence is still very much in place, but you can see this PPO is pointing down right now. We need to reverse, and we need to do it soon. If we do, I think that's very bullish if we can recover that level, because that will be a bear trap or aka whipsaw signal, and that's the scenario I favor. So depending on where you're targeting, if you were just targeting a quick bounce up here, you should have had a tight stop. In fact, you may have been stopped out. If you're targeting a move to these upper targets, or even to new highs, and at least over the previous highs, and the next leg up in coffee, then you can certainly allow for a wider stop. Stops are commensurate with your price targets or your profit potential. If you're shooting for 20-30% on a security, you can use a 8, 5, 6, 7, 8, 10 plus percent stop loss. If you're only going for a 5%, 6% move, you need a much tighter stop, 1% or so. All right, last but not least, precious metals. Gold has now hit the 1911 target, and that's where we're at now. That is resistance, so it's probably going to face some headwinds right here. There's the line. You can see reactions all back here. 1, 2, 3. We kind of went through there, traded around it, so those are enough reactions as well. So that's it. So that was the minimum bounce target after the breakout of this bullish falling wedge pattern right there. Breakout back test, rally up, positive divergence at that low. But what we're doing now is we're setting up some negative divergence if we reverse here off that resistance level. And again, this is just a brief pop above it. We're not comfortably above it. Can power on up, that's your next target zone, but I'm favoring a pullback soon, and I'm going to show you what to look for if you want to try to hone in on when that pullback's going to start, when or if. There's an uptrend line I just gave you for gold off the recent lows. Let's look at silver, and then we'll look at the currencies. Silver, same thing. We're a little shy, still shy of that. We hit that 23,672 resistance target a while ago. There was your divergent low in silver. Remember, the move in silver has been much higher in percentage terms than gold. There's your positive divergence, stair-stepping higher, still reversing a little shy of that 24,833 potential target there. But here's what I want to watch right now. These uptrend lines. I just gave you one on gold. There's one on silver. And I am leaning this way. I'm leaning towards these breaking and another leg down in the metals. I can see a little more upside before that happens, possibly all the way up to that 220 target. But again, watch for a break of this trend line, not just silver. Watch for gold to break, and then I also want to cover the two big currencies that I like to watch for gold, and that would be DX, dollar futures. That's what we're looking at here. Okay, so remember, we took out this 93,636 to 93,862 resistance zone right there. There was your breakout. We did have a decent rally, pretty good rally in the dollar, but that's set up with this little small bearish rising wedge, negative divergence, and there's your divergence, and that triggered this correction. We hit the top of my zone the other day, the first support level, and I told you I expect a little bounce and then a jog down to the bottom, and that's where we just did. 93,636, we hit it almost to the button. And so now with positive divergence in place, what I'm favoring is a breakout above this trend line. Now these should all come in together. If you want to play it safe, wait for a breakout in the uptrend or the downtrend line here in the dollar, and then wait for breakdowns in gold and silver above those comparable uptrend lines. Remember, this is looking at gold and silver in reverse. If the dollar does this and breaks out of the downtrend, gold and silver will likely break down below those uptrend lines and do the opposite. They'll probably go down. And so there's the a potential target for the dollar all the way up there, about 95,675. If that happens to be hit, that's not going to be good for gold and silver. It will most likely provide a headwind for those two and probably bring them down. And if they don't, remember, I always say this, resistance is resistance until unless broken. So there's our downtrend line. Maybe we zag down higher or lower. I'm sorry. There's the next support level in the dollar. It's not my preferred scenario, but it's certainly possible. And if so, then that's going to lift gold and silver a little bit more as the dollar continues to fall. But keep it simple. Just watch for the breakouts. And the more impulsive they are, the more convincing, the more likely they are to stick. And then last but not least, looking at the dollar in reverse pretty much is looking at the euro futures. Again, this is all kind of aligning. Just like in the dollar you have positive divergence, in the euro you have negative divergence, because these charts are going to be upside down. When the euro rises, the dollar falls, and when the dollar falls, the euro rises. So there's your small bearish rising wedge where you just hit the top of that resistance zone right there, and a break. Again, it's to me pretty simple. Nothing's guaranteed, but a break of this trend line, especially an impulsive break, has the potential to trigger another leg down in the euro, and that would be another leg up in the dollar. And to keep it simple, gold and silver are going to track with the euro because they trade inversely the dollar. So should this play out like this, then that will most likely play out for a drop in gold and silver. And then let's look at those charts. I know I cover futures all the time. If you trade gold, let's look at the daily chart and see where we're at. This was this line here. Let me color it up because that's the more important of the two. Pretty big level there, about 179.33 in GLD, the ETF. Why? Well, look at all these reactions. 1, 2 candles, 3, 4, 5, 6, and then we gap down another couple of reaction right there that day and the second day, and it couldn't hold that level. It tried intraday breaks, so numerous reactions break down, and we're back testing from below. Doesn't mean it can't go higher, but this is the first back test since we broke down, and that's a rally back into resistance, and that's also gap resistance with the top being right there. So this is what I favor in gold, either a little more upside to the top of the range, top of that gap support, and another leg down. And that also meshes with my weekly chart. Way back here is where I started exiting longs on gold a little bit early as we're approaching this resistance zone, but then started calling for a decent correction right here. All along I've been leaning towards and favoring a move back to this trend line right there, and that would about mesh with a move down here to the that 168.70 level right there. And so something like this is what I'm looking for in gold, somewhere along those lines. And so we looked at the euro and we looked at the US dollar, and now we're looking at the two combined. This is the euro US dollar pair, so EUR USD, and you can see right here we had this ascending, broadening wedge type pattern, and well-defined uptrend line right here. We broke down below, and we're back testing from below. So that's why I favor another leg down in the euro. It meshes as well with what I'm seeing here. And remember, bigger picture, we had a nice clean uptrend line that we were walking up for a while, and we broke down and back tested. So that put the euro on a sell signal, and it looks like we're zigzagging down. And I would say here, worst case scenario, I think I'll pull back to this level. At that point, if we happen to get all the way down to that 418 level, and the charts look good, I think that would be the next leg up in the euro, and that's where I'd be really interested in aggressively getting long in the gold and silver and the mining stocks again. So that's what it looks like on the daily chart. And on the weekly chart, I pointed it out at the time a few weeks back, calling for that reversal in gold based on this long-term. This is a very long-term downtrend line on the euro-US dollar pair on the weekly chart. You can see, all these reactions that make it a significant downtrend line, and that's it. We rallied into it. I remain longer term bullish on the euro, bearish on the dollar, longer term bullish on gold, bullish on silver. It's just this intermediate to near term stuff. So based on this, the fact we rallied into that level, stalled, couldn't take out the trend line, reversed, then we broke the uptrend line, which I just covered on the daily chart. Big red candle to boot. That's impulsive. That's a convincing breakout right there. That's with conviction on the weekly chart. And looking at this, we didn't really hit support. Doesn't mean the correction can't be over, but I think we come back down here at about 115 right there, at least on the euro before all is said and done. And if we do, again, that should be a net bearish factor for gold, then a reversal. And so again, I might be interested in adding back long-term positions in gold and silver and in the mining stocks if that scenario plays out like that. And that is it. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.